Time Warner will release its first quarter results before the bell on Wednesday. Will the report do anything to revitalize the stock? I'm joined by Tuna Amobi, Senior Equity Analyst at S&P Capital IQ. Tuna, Time Warner has been one of the worst performing media stocks in 2015. So what do investors need to hear to shake the stock out of its rut?
Well, I think basically the company should reaffirm its 2015 outlook for mid-teens EPS growth. I think they have a strong foundation to build on. We expect relatively strong results from across the television networks, HBO. The potential weakest link, I think, is going to be advertising. But all in all, I think they should have a pretty decent quarter.
Well, since you mentioned HBO, as the amount of cord cutters increases, Time Warner represents one of the biggest stories in streaming with the launch this month of its HBO Now service. How much do you expect HBO to drive results?
Well, I think the HBO is going to be mainly driven by subscriptions. If you're asking about the recently launched HBO standalone streaming service with Apple, that's obviously something that investors are paying close attention to as a potential longer-term, catalyst. But I think for HBO, I think, they're coming off last year where they added 2.8 million subscribers. The challenge is going to be to increasingly monetize that, not just in the U.S., but also internationally as well.
And earlier this month, Netflix reported record growth for its global subscriber base. How much pressure does that put on HBO and thus Time Warner?
It certainly puts more pressure on them. However, I think there's a lot of viewers actually subscribe to both offerings, so I wouldn't necessarily view that as a zero-sum game. We think HBO, with a lot of original programming, can really generate some traction. I think the real challenge is going to be to retain those subscribers in the face of cord cutting from guys like Netflix, Hulu, and Amazon.
So what is your view on shares of Time Warner here?
Well, we have a buy recommendation on its shares, 12-month target price of $90. We think, in hindsight, the rejection of the offer from Fox News Corp to acquire the company, in hindsight, seems to be a good move because the stock isn't really that far off from what News Corp or Fox was offering at the time. So we think there's a lot of upside actually left from here.
Thank you so much. Tuna Amobi, Senior Equity Analyst at S&P Capital IQ.
Thank you.
And I'm Brittany Umar for The Street.